Australia's sovereign wealth fund has been directed to consider investments in green energy and housing, but only if there's money to be made. It's the first major change in the Future Fund's 18-year history. Political reporter Jacob Grieber joins us now from Canberra. Hi there, Jacob. So take us back a step. What is the Future Fund and what's its purpose?
Ros, probably the best way to think about it is it's the nation's piggy bank. It's a sovereign wealth fund. It was set up in 2006 by John Howard and Peter Costello when they were under a lot of pressure to address the liabilities that the government had at the time, which was paying public servants and former politicians essentially their pensions, their superannuation savings. Those liabilities were essentially open-ended because they had defined the public servants in question had what's called a defined benefit scheme. So it was a big hole in the budget. The government at the time solved it by taking what was left of its ownership of Telstra and putting it into this fund. That fund now generates a steady return for the government of the day in the order in coming years of around $8 billion a year. It's currently sitting at about $230 billion worth of assets, Ros. So it sits there, and what it means essentially is that taxpayers today don't have to pay for those pension liabilities. They're taken care of by this fund.
Right. So what's the Treasurer announced today, Jacob?
So the big change is to the investment mandate. The Treasurer is wanting the fund to consider, when it's reasonable, when he says it makes financial sense, putting money into three key areas. He wants them to invest in housing to get more stock into the housing market. He also wants the fund to look at investments into energy renewables, the transition away from fossil fuel power. And the third thing is a more general infrastructure play. There's also a point today where he said the government promises not to draw down the fund until 2032-33, Ros. So he's insisting that these changes are modest. He's portraying them as such and will not distort the way the fund operates. Here's what he said a moment ago.
We haven't seen major changes like this to the Future Fund since its inception, and there's not many institutions that would expect to go for 2 or 3 or 4 decades without anybody having a view about how you could improve them. That's what today's about.
So the opposition vehemently disagrees with the Treasurer on this point. They say it ain't broke, so it doesn't need fixing, and they warn that by adding these additional mandates to what it has to consider, it may well end up distorting the fund's focus and may well hurt its returns. The shadow Treasury spokesman Angus Taylor weighed in shortly after the Treasurer today.
Today we've learned that this Labor government will be raiding Australia's nest egg to cover for its economic failures. Raiding Australia's nest egg in the Future Fund to invest in the Treasurer and the Prime Minister's pet projects. We will oppose this change and if elected to government, we will overturn what the Labor Party is seeking to do here. This is absolutely the wrong direction for the Future Fund.
This is unlikely to be the last time we have an argument now about the Future Fund. There's certainly been clashes in the past over things like whether it should invest in tobacco or munitions. The Greens, for instance, want it to divest itself of fossil fuel assets. Those things were about what not to invest in. What the Treasurer has done today is talk about what it should invest in and where its priorities might lie in the future. That certainly sets this up to be an ongoing discussion about how the fund should operate. And Ros, it also might mean that the Treasurer himself gets asked questions in future years if the fund doesn't perform as well as it has been in the past.